Hello everybody, my name is Nicole and I'm a private investor and technical analyst. And what I thought we'd do today, because it's the 1st of October, I'd look at several longer term charts with an idea of trying to work out where we've come from this year, where we might be going to, and who's in a very bad mood about things. Do remember that China has an extra long holiday this year. It's the China national holiday, and they've tacked on a few extra days as well for the harvest festival. So they'll be off and out of action for a total of 8 days. To add to the confusion, today, the Tokyo Stock Exchange, which is the 3rd biggest in the world, has had some major outage and the whole market is closed. And this matters, it particularly matters on the 1st of October, because like in Britain, our financial year is from March to March. So it marks the second half, October marks the start of the second half of the financial year, which is where you want to perhaps rebalance your holdings and see what you're going to do. So this is quite a big problem. But my 3 charts today are actually of US stock indices. So my first one is the one that's done best and one of the few that's actually up for the year. And this is the Nasdaq, the technology-heavy Nasdaq, and it is a weekly chart. And you can see the low there in March. The trend line has been broken a few weeks ago with a major big doji. That is a rather worrying black candle at the top there. So it's not the end of the world, a little bit worrying. This week, we are still within the range of the last 3 little weeks. And we're still sort of hovering ever so close to the 50-day moving average, which is above the 200-day moving average, which lies pretty much at the 50% retracement support level. So there is plenty of support. The chart is still bullish. And I think we're going to pause a little bit because of that big black doji at the top there. My second chart, which is a monthly one, is the S&P 500 index. It starts at the beginning of 2018 when we start a potential broadening top chart pattern. September's candle is well above the top of that broadening chart pattern, but it's a black one. Another one, it's a doji style candle, and it denotes indecision and perhaps instability as well. What is also the case is last time that we traded above the top of this potential broadening pattern was at the very beginning of this year. And you can see what happened in January, February, and then March. You had 3 consecutive very large black candles. I mean, so there is a precedent at these sort of levels. It is something to worry about, not fret ridiculously, because we're still above the top of the broadening pattern. We're well above Fibonacci retracement support levels. But I would approach this index with caution, not extreme. Now, my third chart is a quarterly one of the Dow Jones Industrial Average. First things first, we have a trend channel that I've marked there, which started in 2009. Above that trend channel, we've got a potential broadening top pattern, just like the S&P, which started at the beginning of 2018. This quarter's candle has a spike high, a shooting star, above the top of the broadening pattern. Channel support, the top of channel support held, and we're just above Fibonacci 38% retracement. We're well above 38% retracement support. So we do have support. It's not the end of the world. But realistically, I don't think this index is going to make new highs this year. If anything, it's more likely to drift and test those retracement support levels. So that's the outlook for the 3rd quarter of 2020. Good luck to you all.